Well guys, let me just start out today's video by saying it's a heck of a day out there today, okay? Public account, we're up 5 figures plus on the public account today, okay? And a lot of that is because of Tesla stock. I mean, a lot of our stocks are having an amazing day, but Tesla stock is, I think, the king stock of the day. Tesla stock is up nearly $23 per share today, up over 6%. Yes, you heard me right, up nearly $23 per share. Needless to say, Tesla's having an amazing day. And by the way, welcome into the new set of 2020. I hope you guys enjoy this new set. I was planning on saving it till January, but man, just a little impatient sometimes, and I had to show it off at the end here of 2019, okay? But a lot of this positivity around Tesla stock here today is the fact that another Wall Street bear is conceding that Tesla is way ahead of others in one key area of electric vehicles. Credit Suisse thinks that Tesla's focus on electric vehicle batteries, both in development and production, is a key advantage for Elon Musk's company over other automakers. He says, quote, "While we hold an underperform rating on Tesla," so kind of like a backhanded slap, let's call it that, okay? "We nevertheless believe it's important to give Tesla its credit where due." Well, thank goodness somebody's actually thinking like that, because too many times people get negative around something and it doesn't matter what that company does, it doesn't matter what that person does, they just always look at the negative. And it's like, even if you're bearish on Tesla, even if you don't believe in the stock, even if you think it's undervalued, you have to admit they're doing a lot of amazing things, okay? Credit Suisse analyst Dan Ivey wrote in a note to investors on Monday, he says, quote, "We believe Tesla is leading in areas that will likely define the future of car making, software, and electrification." And needless to say, if you don't know this, Dan Ivey, he's had a lot of negative things to say about Tesla stock over the past year or so, okay? So if you go back to just June, Credit Suisse initiates Tesla coverage sees 15% downside amid competition. And this was back in June when Tesla stock was massively lower than where it is currently, okay? And they were talking about 15% downside. He was saying Tesla will have to settle as a niche automaker and will likely have to compete head to head with incumbent Volkswagen, he was saying back then. And so saying like Tesla's always going to be like a niche player in the auto market, and basically like a lot of the bears say, you know, the big guys are going to come in and they're going to smash up Tesla, okay? General Motors, Volkswagen, all these guys are going to come in, they're going to take over the market, the big boys, the establishment, they're going to come in, they're going to take Tesla out, and Tesla will always just be some little, like little minute company in electric vehicles. That's what they're saying, and that's what he was saying literally just, you know, I don't know, probably what's that, 5 or 6 months ago, okay? He also said Tesla can't deliver hyper growth anymore. This was back in October he wrote this, okay? He said, "Investors who see Tesla as a hyper growth stock should dial their expectations back," an analyst wrote on Friday. This was Dan Ivey once again. And this was back when Tesla stock was about $220 a share, $230 a share. He slapped an underperform rating on the stock, put a price target out there of $189, and say, hey, you shouldn't expect any hyper growth, okay? But needless to say, he's finally coming to his senses a bit and getting a little more positive on Tesla stock and trying to give them some credit, which once again, regardless of how bearish you are on Tesla, whether you think it's overvalued company, whether you think it's not going to be the future, whether you think everybody's going to come take them out, you still have to give them a ton of credit for where the company's at right now, okay? And we've seen a lot of people who were very, very bearish on Tesla stock over the past year or two get to turn into people that are actually bulls. We've seen several short sellers that would go on CNBC, talk negative about Tesla all the time, change their positions over the past year or two to actually be very, very positive on Tesla. And some have actually gone from short selling the stock to actually buying the stock, okay? Even somebody like a Jim Cramer, who had historically been, you know, pretty negative whenever Tesla got brought up. And as we know, like pretty much everybody on CNBC, they all seem to be negative or have something negative to say about Tesla stock. Even he is now turning bullish on Tesla stock. So we're seeing this as Tesla's continuing to grow, as the numbers, the concrete numbers getting even more and more impressive around Tesla. I think even a lot of the bears are starting to waken up and kind of figuring out, whoa, I think we might have made a mistake here. I think we need to get less bearish and maybe even consider turning positive on this stock, okay? The firm has a notably pessimistic view of Musk's company with a $200 target that represents the expectation that Tesla stock will drop 44% from its current price of $360 a share. Real quick, backhanded compliment, okay? You know, this reminds me me of that guy the other day, okay? So essentially, this other analyst last week, he went out there and put a $500 price target on Tesla stock for his bull case, but his bear case on the stock was like $10 a share, and where he actually thought the stock was going over the next 12 months was $250 a share. So what I'm finding time and time again is these analysts that are negative about Tesla stock are just getting a little less negative, but they're not really necessarily turning positive. They're still giving backhanded compliments, which a backhanded compliment at the end of the day is like something that initially when you hear it, it sounds like, oh, this is positive. This is a nice thing they're saying about us. But then, you know, when you kind of look at it in retrospect, the way they frame it, it's kind of like, that doesn't sound quite right. While Credit Suisse did not budge on its rating or price target, Levy says he and his team visited the Tesla Gigafactory 1 in Reno, Nevada, and came away impressed by the company's battery strategy. Levy said, quote, Tesla is likely ahead of others on batteries, the core of its electric powertrain. So this gentleman and likely his team actually went out to Reno, Nevada, or Sparks, Nevada. I know some people like to correct me, Sparks, Nevada, and actually looked at that massive gigafactory that they've been building over the last 5 years or so, that massive factory out there. And they actually went for a tour, and they actually got a little more educated on what makes Tesla so special, how they're producing so many batteries, and the amazing things they're doing out there. And I wish more and more analysts and more bears would actually go to like these Tesla factories and actually see what's going on and actually look at these underlying demand numbers and kind of realize like Tesla has amazing technology and they're way out in front of a lot of these other companies. And once again, this is reminding me so much of that analyst that we covered last week where it's just a backhanded compliment, okay? The analyst noted that last year Tesla has a total of 44 gigawatt hours of battery capacity, with 35 gigawatt hours from its Nevada Gigafactory and 9 imported from Panasonic. According to Levy, that's so far ahead of the industry that it's just shy of the 46 gigawatt hours of all other automakers in the world combined. A gigawatt hour is a unit that measures energy output and represents 1 billion watt hours. Next year, Tesla is expected to host a, quote, powertrain day, which Levy expects will shed light on Tesla's battery strategy, including increasing production, decreasing costs, and improving each battery's efficiency. Those will all be 3 amazing things. You want to see Tesla be able to produce more and more batteries. You want to be able to see them do it cheaper and cheaper over time, and you want to see those batteries become more and more efficient over time, okay? He says, quote, we expect Tesla to highlight why its work in battery gives it a clear competitive advantage versus other automakers, Levy said. And so if we just like kind of read through this, okay, it sounds like the guy is kind of bullish on Tesla stock, but yet his price target is lacking in a significant way. So it sounds like he's starting to get like, oh, they have all these competitive advantages. This is going to probably keep them ahead of the other companies. And likely, as long as they continue to build on that, they'll always stay ahead. But yet, he has a $200 price target on the stock. There's something missing there, okay? There's something missing there. And we're seeing this from a lot of these analysts that are turning, let's say, less bearish on the stock, but still have these unbelievably low price targets. And we gotta say, what do analysts not get about the valuation? There's something going on here with why these guys have such low price targets, but why their commentary is actually turning more and more positive on this stock. And I figured it out like this, okay? And let me explain it best here, okay? So here's what's confusing analysts, and here's why they have trouble with the valuation. Tesla right now has a market capitalization approaching $70 billion. That's a really big number. I'm gonna show you guys a couple other companies here for reference. And keep in mind, as of right now, Tesla is a niche automaker in the world. They will produce something around like maybe 400,000 units in 2019 out of probably 90+ million vehicles sold around the world. So as of right now, here today, they're a niche player in the auto market. In order to be a big player in the auto market, you need to be moving at least a couple million units per year. So they're niche right now. They got a big valuation on it, and this is confusing analysts because they look at something like Ford, right? Ford moves millions of units a year. And Ford is a company that has a market cap on it of under $40 billion. And this is a company that is extremely profitable. And so this is where it starts to get really confusing for analysts trying to figure out the valuation here, because they're looking at Tesla and they're like, okay, Tesla's valuation is massively bigger than a company like Ford. Meanwhile, Ford sells way more vehicles and Ford makes a ton of profit. Tesla sells hardly any vehicles and loses money. And yet Tesla has this huge valuation. So analysts are just getting very confused and like, this doesn't make any sense, okay? You look at something like a General Motors. General Motors has like a $52 billion market cap. They're one of the biggest automakers in the world. They produce millions of cars a year. They make billions upon billions of dollars in profits. And once again, a company that if you're gonna compare it in terms of scale of how many vehicles GM sells in a year compared to Tesla, as of right now, they're not even close. And obviously Tesla has been a company that still has yet to make a yearly profit. Meanwhile, you have GM that makes, billions upon billions of dollars in profit every year. And so people are looking at this, analysts, let's put it that way, analysts are looking at this and they're like, the valuation. They can't wrap their head around the valuation, okay? And let me explain it like this, okay? You know those other guys, the other big automakers, they're kind of going down. Tesla's going up in a massive way, okay? So if you go back to 2007, the top nine selling phones in the world were made by a company named Nokia, okay? The top 9 of 9 phones sold in the world were Nokias. Like, how insane is that, guys? Meanwhile, you have this phone come out, essentially it's called the Apple iPhone, okay? It sold 7 million units in 2007, and Apple was a very niche player. They're coming in this market, they're very niche. Nokia is the dominant player, and you could look at that and you could say, well, Nokia deserves a massively higher valuation than something like Apple. But what they didn't realize was Nokia, they might not even be relevant when it comes to selling phones over the next 5 to 10 years because they might not have the technology and the wherewithal and the marketing and the branding to get themselves there. Meanwhile, Apple looks like it's perfectly positioned to like capitalize on this next massive wave, right? And so what ended up happening over the years? Well, now Nokia doesn't even have one phone in the top 10, okay? Nokia is almost a joke as far as a phone producer. I haven't known one person that has a Nokia phone probably in the last 7 to 10 years, okay? Not even one. No one buys Nokia phones nowadays, okay? Meanwhile, remember that Apple iPhone that was just like that little niche player that was like an up-and-comer, right? Apple sells over 200 million iPhones a year, over 200 million, and that number will likely go to 250 million plus next year. And not just that, but Apple makes between usually 80% and 90% of the smartphone profits in the world. And so now if you look at this, it's like, why the heck would anybody have touched Nokia stock back in the day? And Nokia could end up being like a Ford and a General Motors and some of those other companies, right? Where Ford and General Motors and all these other automakers, VW, any of the big ones out there, right? These guys are trying to convert over to electric vehicles as fast as possible because the whole wave's going toward electric vehicles, and at the same time trying to figure out like how do we have the vehicles drive themselves because Tesla's running toward that game as well. And so this just makes it incredibly hard for anybody to try to keep up with Tesla. And so Tesla's business is booming and will likely continue to boom for the next 5 to 10 years. Meanwhile, a lot of these other huge automakers, the Nokias of their day, right? We don't know who will be even relevant there in 5 to 10 years from now. Who will even be relevant? Or are some of these big, huge automakers that are making billions of dollars in profit right now and are these massive companies, will they even convert? Will they even be relevant? Or are they going to be another Nokia where it was like, wow, remember when they were the dominant company in making ICE vehicles and then they just became irrelevant, kind of like Nokia was like the go-to phone in like 2007, 2006, and they were doing the biggest numbers, and then all of a sudden it was Apple and Samsung now, and Apple makes 80-90% of the profits, and never mind that, Apple figured out how to build a bunch of other products and services around their main product, which Tesla could maybe do over time. So that is why I just don't think a lot of these analysts can figure out the valuation around Tesla, because they're looking at it, what's going on today, and they're saying it doesn't add up, because they're not producing enough cars compared to these other companies. They have a way bigger valuation, they're not making profits as of right now, even though 3 of the last 5 quarters have been profitable, they have been very small profits. And so analysts look at this and like, it just doesn't make sense. The valuation doesn't make sense. Well, you know, I think it all will make sense over the next 5 to 10 years. But as of right now, I can definitely understand why these analysts are a little confused. I think they just got to look at a more bigger picture, and we've seen the writing on the wall. We see what Apple did and the way Apple disrupted multiple industries, and now we're seeing Tesla from 2020 to 2030 is going to be, in my opinion, one of the most disruptive companies. If you look at, you know, the last 10 years, we saw companies like Amazon and Apple really just completely disrupt from 2010 to 2020, right? 2020 to 2030, in my opinion, one of those massive companies going to disrupt a ton of industries will end up being Tesla. And that's why I'm a huge believer in the stock, and that's why I think if you're looking at this on a long-term basis, it's an undervalued company. But if you're looking at it on a short term, it absolutely looks you know, super overvalued if you're looking at what's going on today in the business. But if you're looking at this from a long-term perspective, you know, the valuation can definitely make sense as long as they continue to execute, guys. So hope you enjoyed this video. As always, make sure you smash the thumbs up button, leave me a comment down there on whatever your opinion is on this, all right? Thank you for watching. Have a great day.